Hey guys, how's it going and thanks for coming. I'm Nick, and in this video I'm dressing up seriously for you guys because this is a serious topic we have to talk about. Should you be buying a house right now in 2020? I've been doing a lot of research and I really wanted to consolidate all the information down for you guys. So the structure we have going on is first looking at the statistics and all the numbers. Are we in a mortgage crisis right now? A lot of things are going on, and how could that possibly be good if you're looking to be a buyer? So then we're looking into how could that affect the real estate market. Then at the very last thing we're going over is what should you be focusing on right now. So let's get started. So starting off with the numbers, and if we're in a mortgage crisis right now, we of course have to first start off with unemployment and jobless numbers. You could see in this chart it's just been crazy over the past month. This goes back to, like kind of in the 60s, and it really was only peaking 500,000, maybe 600,000 or so in previous recessions. Recently it was 6 million a week. So right now for the past month, over 22 million people have filed for unemployment, and it's probably going to get worse. I'm recording this on a Tuesday, so more job numbers are coming out for Thursday, so we'll have to see at that point. And especially since we're still in lockdown, and we might still be in lockdown for the next month, so this probably isn't ending. So you could see these unemployment numbers. Now these are actually two things to look at. The first is the regular unemployment that usually the regular media outlets talk about. We remember last time, in February, they were saying 3.5% all-time lows. Well, there's another one called the U6, and that's the total unemployed plus all persons marginally attached to the labor force plus total employed part-time. All you gotta know, this basically makes up of more of an accurate statement, given it's not probably what it actually is, but this is definitely closer to the actual number than what they're telling us. But you could see toward the end of that chart is definitely starting to spike, obviously. And basically every recession starts with a spike in unemployment. Another chart, because I love charts, this is actually the labor force participation rate, and you could see it actually never really recovered since the last recession in 2008. So no one really talks about that. And speaking of recession since 2008, you could see the personal savings rate after the Great Recession. People definitely started saving more, so we could start seeing a lot more of possible similar behavior. Now that it kind of dropped since then because people forget very quickly, but we could see a period of people saving more as well. So with these unemployment numbers, people are going to be struggling to pay things. Basically everything. So we could see with the largest bank in the world, with JP Morgan, with their recent earnings, we could see their earnings per share actually declined 69% in quarter one. The bank also set aside $6.8 billion in loan loss provision, so they are expecting people to struggle to pay, so they want a good cushion. So these are just more numbers showing that we are in a pretty rough situation. Now if you haven't heard already, because it's probably been all over the news, especially on the internet and YouTube, that there are forbearance packages for mortgages. Now what that means is, we could see right here, forbearance is when your mortgage servicer, that the company that sends your mortgage statement and manages your loan or lender, allows you to pause or reduce your payments for a limited period of time. Forbearance does not erase what you owe. You'll have to repay any missed or reduced payments in the future. So if you're able to keep up with your payments, keep making them. The types of forbearance available vary by loan type. So as we just read, that you are able to delay your payments. You don't owe that right now. You will owe it later. So I did hear that people could forbear their mortgages 3 up to 6 months. So you don't have to pay your mortgage. What they're not telling you, and I'm hearing a lot more people are worried about, is that, yeah, during that time you don't have to pay, but at the end of that period, you owe all of that in a lump sum. So given they might try to help you with that lump sum payment, but you're going to owe that money at some point or the other. So all of this definitely leads to a mortgage crisis. All these people are unemployed. If they didn't delay these mortgages, then people wouldn't be able to pay them. So then foreclosures could possibly start happening. So that's kind of looking at the possible statistics and facts that are going on right now, which we are in a mortgage crisis. People are struggling to pay these things. So how does that affect our number two thing to look at is the real estate market. So people are probably like flooding to Zillow to see if prices are finally collapsing because they want to buy their first home. Well, it really doesn't work like that. Real estate markets are delayed because when you really think about it, people lose their jobs. They struggle to go through their payments, but that doesn't mean they're going through foreclosures like right now. So if something will happen with this mortgage crisis, we would possibly start seeing this in 6, 12, maybe 18 months into the future. People would also start looking at their house, like should they keep it? So maybe tired landlords, they don't want to deal with this, especially people not being able to pay their possible rents with unemployment. Even small businesses are shut down, so no one could pay anything. So maybe people don't want to be landlords. Maybe even investors. They say this is kind of possible top of the market. They want to take their profits and get the heck out. Now, yes, I am focusing on like America, what's going on here, but this is kind of worldwide as well. It obviously started with the illness. But I want us to first look at there are different types of real estate markets. There are linear markets and also cyclical markets. Hopefully I spelled those right. But depending on the location that you're in, and it could be possible combination of this, but let's talk about what this even means. So a linear market is that it kind of goes up in a straight line. Now there might be like slight variations, but overall it doesn't go up very quick, but it also doesn't go down very quick. So maybe not that drastic of an incline. It might go like a little bit flatter line. But compared to a cyclical market, this has huge ups, huge downs, huge ups and huge downs. It might have like a slight incline, but there's a huge difference between cyclical and linear. So that's another factor of the real estate market. Not only delayed, but there are different kinds. So just some quick examples of a possible linear market, maybe like mid-country America, while there's less people there, but it kind of just stays maybe steady. Where maybe if you look at California, huge increases, but we also saw with less recession, huge decreases. Another possible example could be New York. I live in New York and their house prices are very high, so they could drop drastically as well. And the places in between, I guess you could call them like a hybrid of both. I spell hybrid wrong. Both a possible linear and cyclical. So it might be a little bit more smoother, but it has ups and downs. Now, why we're even talking about this is because if you're in a cyclical market, would have a completely different strategy is if you're in a linear market. If you're in a cyclical market and prices are right here, why would you buy? Even if it's starting to decline, because it could decline rapidly. Versus in a linear market, even if you're at this peak, it's not going to really decline too much, so that could influence your decision. So now let's put it all together. We kind of know what's going on right now. Forbearances are going on, unemployment, and there's possible mortgage crisis right now. We know a little bit about the real estate market, how it could be delayed. If something's going on right now, it doesn't mean it's going to happen or drop for right now. So once we combined all of that, should we be buying right now? So of course this is really a decision up to you, but I do want to go through the mindset that I have and what we can be focusing on. So the first thing, if you are planning on at least saving to buy a house, no investing. And we could see in the market, especially maybe if you're trying to save and your savings account isn't giving you much, should you invest maybe the stock market? If you're saving to buy a house maybe in the next year, maybe next 2 years, you could lose money. At this point, we should really be hoarding cash. We need liquidity. So when we want to pull that trigger and buy something, we're able to. You know, we recently saw if you're trying to invest, you know, you're trying to save more money to get into real estate, you could see things drop like 10, maybe like 50% relatively quickly. So if you're trying to save in the short term, you really shouldn't be looking at investing. That's my personal opinion. The next two things we really have to focus on, and I'll show you exactly what's happening with some banks out there. So we have to look at BAM, down payment, and also our credit score. And I'll show you exactly why. So I do have an article here. I'll leave a link in the description if you want to check it out. But this is going over, the title here are these banks are pulling back from mortgage lending. Here's what that means for the housing market. So if you're not familiar with the Federal Reserve, they are buying up hundreds of billions of dollars of mortgage-backed securities because they're trying to boost liquidity for banks and encouraging them to lend to individuals. The thing with banks right now is we saw before that JP Morgan was actually starting to hoard cash because people are starting to struggle to pay for loans. Well, you think they're going to continue with these lending practices? Well, with this article, it's saying homebuyers seeking a mortgage through JP Morgan must now have a credit score of at least 700 and must put a down payment of 20% of the purchase price. And they really are starting to shift their focus to refinancing because interest rates are so low and people are definitely trying to take advantage of that. So before even thinking if we can buy it, can we literally purchase it or get a mortgage through a bank? Because both of these are becoming a lot more stricter. Banks are taking on more risk, so they want to make sure whoever they're lending their money to could actually pay it back. So they want a larger down payment. We're talking 20%. That would avoid your PMI costs. That's just a little extra insurance that you have to pay because if you put down less than that, it's a little bit more risk for the bank. But that's why the bank doesn't want risk. So you have to put down 20% and a credit score, which is actually pretty high, of 700. So when you start focusing on, you know, make sure you hoard your cash, which is why I mentioned that before, and also work on your credit score. So that might have been a mouthful. We kind of know the statistics going on. We know a little bit more about the real estate market. We know now the possible more stricter guidelines that we might have to face with going for new houses and mortgages. The question still remains, maybe you prepared for all of this. Is it a time to buy now? Not so sure. Thanks for watching. See you next time. No, I'm kidding. But it really depends how you view it. I can give my opinion on this situation, and then you would have to do your own research and see if you want to continue. But knowing what's going on now with the mortgage crisis, of how we really haven't seen its effects on the actual economy yet, and how the real estate market has a delayed effect. So, like, especially for me, I am looking to buy a house in the near future. I'm not buying exactly right now. I am starting to look because, you know, something could happen in the next year or two. So this is a great time to start focusing on these things, hoarding that cash, increasing your credit score, focusing on a possible area you want to look at, and then once it happens, then you'll be able to pull the trigger at that point. Long story short, probably not. I'm not going to be buying right now. I know a lot of people are definitely not buying right now. Like, look at the market. Now, unless you get like a good deal because people are struggling and possibly just want to get out of a house. But I really have a tough time seeing prices go higher than they are right now. It almost wouldn't make sense because a lot of people are struggling. So there's really no harm in waiting to see what happens in the next year or two. So during that time, we could certainly prepare. So this is certainly the planning phase. We got to prepare so we know what's going on and make sure we have liquidity. If, by the way, you are trying to figure out specific ways how to start saving, I do have other videos with that. I went over like an ultimate guide, 50 frugal things to help you save money. You could definitely check that out. Link in the description. So let me know what you guys think. If you have any questions, comments, concerns, let me know down below. Love to hear what you guys have to say. Do you think you should be buying real estate now or wait to see what happens. Now, it's obviously a lot more complicated than like a 10 or 15 minute video, but this is definitely something to focus on. I kind of narrowed down for you guys. So if this helped, hit this video with a thumbs up so more people could find out what's a better option for them during this time of crisis. And don't forget to subscribe for more videos. I've been producing a lot more for you guys recently. So thank you so much for watching. Really appreciate it. And I'll see you guys in the next one.